I hope you're doing well and welcome to today's edition of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. We're usually live at 9 a.m., but today, unfortunately, because of unforeseen events, starting 35 minutes later than usual. Sorry about that if I left you hanging. What we're gonna do now is we're gonna take a look at the euro, Bitcoin, gold, crude oil, and the DAX 30. Let's see what's happening in the market and see if there's any interesting ideas or things we need to take into account. So we'll begin with the euro, and in the euro, the market is pretty much trading where it was trading on Friday. Now, it is interesting that on Friday, both the non-farm payrolls were better than expected, and it was an overall a good report. And also, you had ISM manufacturing index, which was better than expected as well. So the dollar should have gained on that, but instead we're seeing the dollar softening a bit against the euro, and today against the pound a little bit, and Aussie dollar is up with 0.9% or 68 pip. So the dollar sort of losing its charm, it's losing sort of the momentum it had, and this is an indication that maybe we're about to see a bigger move lower in the dollar. Now technically, if we're trading the euro, we still can't, however, confirm or position ourselves for that. I know that the Aussie dollar and the New Zealand dollar, I'm bullish on both of them, and the dollar CAD I'm neutral, and the dollar yen I'm for the dollar, and I'm also for the dollar and the pound dollar and in the euro dollar. So it's a bit mixed, and technically it's not mixed at all. Technically it's extremely straightforward. As long as you trade below the May 24th high, I'm gonna treat this trend as bearish. Why? Well, because price is creating these lower and lower highs, and as long as we keep on creating these lower highs, then we have been rewarded very well. In fact, we turned bearish here, the market moved down, and now this would just mean the end of this trend. And then following like sort of the end of a trend like this, you have a bit of a corrective move. So if we take out the 1750 level, this market could head maybe to 119, maybe all the way up to 1996. But it's probably going to be bound to be choppy. What I like to do is I trade a market. So say sell here, try to go with it for as far as possible, and then when you reach your profit target, you just forget about that market and then look at other things to trade. So that's probably going to be the sort of the best strategy for this pair. Now, again, right now, I know it's bullish. I also know that the euro dollar should be much lower given the situation. And as long as it should be below 1750, I'm not going to change my bias. But if we take this out, probably up to 1832 and then maybe 119, and then we'll see what happens. But as long as it should be below this level, then it's more likely that we're going to be down here at 1513 in the next 2 to 3 days. If we take a look at Bitcoin and crypto markets, we had potentially a low in the markets. I did share a few setups on Saturday, because you see crypto markets don't close over the weekend. They're still active. And here Bitcoin took out its May 25th high. But it's not just Bitcoin. You have Ripple, you have Litecoin, you have Ethereum, you have IOTA, you have EOS. A lot of the top coins ended this very short-term downtrend, and this is the first time I'm bullish on cryptos since the market traded lower here. And remember, the last time I turned bullish was down here. I traded not necessarily in Bitcoin, but I traded a push to the upside, booked some profits, and then got involved again. And then the market got out, and I lost a bit on that. But overall, I'm up with about 35% on my trading account just for this year. And hopefully this was the end of this sort of downtrend. And at least for Bitcoin, I think the market might potentially reach up to the May 20th high. So if you look here at the 4 hour, you can see how this is an inverse head and shoulders. This is your head, left, right shoulder, and the break here was the break to the neckline. But we don't even have to complicate it that much. We can just look at the chart and we can clearly see that the price is creating lower and lower highs, and then this is a new higher. So it's a higher high really. This was the last high, and we stopped creating these lower highs, and now we have a higher high. So I'm bullish from pretty much these levels, and I'm gonna be bullish as long as you trade. Where is that line? There we go. As long as you trade below this low, I'm gonna be bullish. Now, there are different ways of dealing with risk management and things like that. Obviously, if this is a genuine sort of reversal, we can easily go down, but we shouldn't really spend too much time here. We should just bounce to the upside. So one might be able to get away with a stop at 7,200-ish, but I want to put it at the actual low, because it might go down and then just trade sideways, but it's first when we take out this level that things turn really bearish again. So I'm bullish from current levels. Of course, the market could trade a little bit lower, but I'm bullish, and I think we can head to the upside. And if you're looking for more ideas like this, check out my Twitter. Over the weekend, there's some really interesting stuff, like Ethereum Classic, an amazing risk reward ratio, and the all markets now sort of testing their breakout levels. We'll see what happens. I think it's looking encouraging though. Next market is crude. So this is crude oil, and this is a 4-hour chart. And you might remember last week I said you probably want to be selling at 68.58 between from here all the way up here, I said, and we touched that sell zone perfectly. We just overshot the sell zone with a few cents. So amazing entry. Market moved back down to the prior low. That's an opportunity to book profits, unless you want to keep it for a break to the downside. Now what I did today, and I think I already did it last week actually, I just reduced the stop loss to the high, and we're at the lows here. So this is not an ideal entry, because if we sell right now, we're gonna risk 300 pip, and yeah, if it goes down to 63, we make almost 300 pip return. So we get our risk back, but trading, you're gonna be wrong about 50% of the time. Well, it depends on how you trade actually. Some people are like 62, which is sort of the average, but if you're following the trend, which I'm doing, then you're gonna be right above. Well, ideally we're at 50%, but most likely even 45, 42%. So what happens is that you're not right all the time, and that's why, for example, if I sell here, we'll risk 218 points or so pips, and then we make 367. So you see, if we wait for that pullback, even if we're wrong on the market, which we will be more than half of the time, then we're still gonna be ahead, because when we get it right, we get it really right. You get it? So looking for that pullback. How do I derive that pullback? I just take a fib from the high to the low. This is 66.72. So from this level all the way up, I think traders gonna sell. I think we're gonna have a push to the downside, final push, and then we'll see. I'm not sure if it's gonna be, this is the time to sell, and then it's gonna move substantially lower. Maybe it is, maybe it's not. I'm not 100% sure. And I don't even think we need to actually go down that rabbit hole right now. Let's just focus on what's going on in the short term. Actually, like that. Here's gold. Congratulations if you have if you had the patience and the ability to stay in the market. Most people don't have the ability to stay in the markets. They want to do short-term trading, day trading, which is also, like, I think that's even more difficult. But a lot of people just get panic. We said, sell here. It's gonna go down. It went down and went up, and then we reduced the stop loss several times. And at the end, we put the stop loss up here, and we almost got stopped out last week. And eventually what happened is that the market moved to our advantage, and it's looking okay, it's looking healthy. If it swings back up to this level, I think the trader is going to sell again, and then we're hopefully going to move to the downside. As well, the situation in Italy has abated. There's not too much risk in that market. I mean, there's obviously risk, but people are not in panic. They don't think we're going to have Italy leaving the EU anytime soon. And we have stabilization in the Italian stock market, and we have more risk on than risk off. Now, this is the German DAX. The German DAX is a bit difficult. The market, I just noticed, is spiked above the trend defining level. We put it really close to trend defining level. The idea was to be bearish here, not necessarily something I want to short. To give you an idea, I'm long US stock markets, and I'm doing well. I'm up a bit, and I think in general that I want to be long, but I don't necessarily want to be long this market, because technically you can see this is a daily chart, and the market is trading sideways between these two levels, so there's no edge for us here to buy in the middle from a risk reward ratio perspective. We want to in essence just the market, if we want to trade this, I think traders want to probably buy down here, and then if they want to sell, they're probably gonna sell up here when stuck in the middle. So it's a bit difficult to do anything here. Now, as a little bonus today, let's take a look at the dollar index. Actually, like a bonus today, let's show you something interesting. This is the S&P 500. The S&P 500 is taking out its May high now. It's trying to take that out, and this could open up for a push to the upside. I'm also quite certain, I told you guys last week as well, that if the Nasdaq 100 would take out its high, it would push to the upside. So that's, I'm quite certain I shared that with you guys as well. So if you want to buy something because of Italy is sort of stabilizing, then this is much more interesting, say Nasdaq a pullback. I am long the Russell 2000 from 1636, and now the market is taking out its high, so hopefully I should be able to reduce my stop loss and look to buy some more. The little bonus that I wanted to show you is the dollar index. Let's see if I can find it here. DXY. So this is the dollar index, and this is a daily chart. This is actually a sign of a reversal. I think this is going to be a little bit like crude, strong sell-off, push, and I think if we take out last week's low, I would argue that we're going to have a bit of more of a correction here. The fact that it's not actually gaining on the back of those numbers last week is a sign, but down, up, and potentially down and trade a little bit lower, and then we'll see what happens. So we'll definitely cap by that level. So keep an eye on 93.72. Take that level out, then maybe we'll move down to the next sort of support level at 95, 92.55. Okay, guys, that concludes today's market update. I want to thank you so much for joining me. Hi, thank you so much for joining me this morning. I hope you're having a good day and had a good weekend. And that's it. Join me tomorrow at 9 a.m. London time. Don't forget to click on the market updates button here and to like the video, and as well don't forget to check out the technical analysis section. In the technical analysis section there's more content as well. I'm going to be uploading some more content in the next few hours and this afternoon, so check this out up here, technical analysis. Okay, have a good day and thanks for watching. Thank you.